Right. Welcome, everybody, to the Hot Seat webinar by the Family Office Club. This is going to be focused on providing founder and investor feedback, capital raisers, people who run a fund, develop real estate, wealth advisors, angel investors, family offices. Happy to have this be helpful to all of the above. We saw many of you, a couple hundred of you, at our events last week, which was our 4 AI workshops in 4 different cities. Those were a lot of fun to put on, and it was great to catch up with many of you in person. So appreciate you being here on the webinar. Real quick on us, I started this platform 19 years ago. We have 16 million registered members in our LinkedIn groups and several thousand people that attend our events in person each year. Our biggest event is the Super Summit. We do 5 big summits a year. One of them is coming up July 16th in Dallas, and that's our $100 million summit next month. So it's a one-day summit, and we have 22 speakers on stage who are all worth $100 million, or they have raised $100 million plus. Either way, they're all giving 5 and 10-minute talks. It should be a fast-moving, great one-day summit. So we hope to see you in Dallas in just about 3 weeks. If you want to learn more about that event and get registered, just go to familyoffices.com. Our big annual events get up to 800 people. Our last event in New York was 530 folks attending, and we always have a lot of speakers on stage per day compared to other events. We're basically providing our community with proximity to wealth, super intelligence, like AI tools and AI systems. We have a super intelligence operating system for you if you're a paid member with us, and then scaling strategies. So this is a bit on myself. I like doing adventure travel. This is my wife and my 3 daughters. We're based out here in Oahu in Hawaii. We've had a couple of exits out of skincare companies, dental practices. We've closed on over 43 different transactions for our own balance sheet and helped structure over 100 deals for family offices and investors that we work with. We've also helped set up a couple hundred family offices over time as well. So a little breakdown of where our members are and what type of members they are. We've got almost 1 million connections in the dental doctor space, 500K on Instagram, about 1 million on YouTube, but mostly on LinkedIn. But meeting in person is what's most important. We build a digital funnel so we can shake more high quality hands in person at the events. And I think that that's one thing that's important to note is that if you're here and you're looking to source deals as an investor, it's important to meet in person, and it's important to develop that trust and relationship. Now that AI can fake a video, et cetera, it's even more important than before. Here's that breakdown of where our members are. And these are the three benefits I mentioned a second ago. Realized I didn't have my screen shared for a second there. So these are the 4 cities where we're hosting our 30 events a year. If you're near any of these cities, hopefully it's very easy for you to come to 4 to 7 of our 30 events a year. There's no extra fee to come to events. We get that question every day. It's like a Netflix subscription, but for in-person events. But we also have 2,000 videos of decamillionaires and centimillionaires within our member portal. It's also where our AI tools live, and it's where you can live stream our upcoming events, RSVP for upcoming events, etc. So make sure you've got the portal access if you're a member. If you want guest pass access to the portal just to poke around and see what 1% of it looks like to see if you'd like to join, just let our team know. Throughout this whole webinar, just let me know if you have any questions, and we're happy to take those. And I just have 2 or 3 more slides to get through, and then we're going to jump into the first hot seat for the day. And the goal of this is just to ask questions via the chat or ask to be unmuted, and we can call on you to go over something you need feedback on. It could be deal structure, it could be deal sourcing, it could be negotiating a transaction, it could be feedback on a one-liner, your pitch deck, a one-pager, materials. It could be related to choke points or the AI tools or the super intelligence operating system we talked about last week at our events. If you're having any challenges putting that in place or questions related to AI as it relates to investing or anything related to due diligence as well. So rename yourself within Zoom. You can right click on your name or go to the 3 dots and rename yourself with the type of membership you have. We like to call on verified members first, and then we call on VIP and then charter members or past sponsors or investors that we're familiar with. This slide we show at all of our events. These are the 6 things that every investor wants you to have. A unique position, something unique to offer, of course. that's unique to them, a one-liner, 1 minute video, a one-pager, a short pitch deck, and then your due diligence questionnaire. 30 questions an investor should ask you with answers to all 30. The AI tools we've created have been used over 30,000 times to date. So they're super practical, and they're basically codifying $1 billion of deals getting done through our community. What we've learned by running our investor and founder community for 19 years is baked into those AI tools. So we believe we have the most in-depth AI tool suite of anyone in the world for founders and investors, or founders that are building meaningful platforms. We think our AI tools are more numerous, more detailed, more dialed in. We find anyone else that's dialing them in at our level are really focusing on one tool. They're doing like only a tool that helps with decks, or only a tool that helps with due diligence, etc. When you're inside of our portal, just don't miss. I wanted to show you this screenshot. At the top here, you see all popular billionaires, centimillionaires. Just don't miss that those are tabs. You click on that and you can see all of our videos on centimillionaires, or only videos that are most popular, or only videos on AI or deal structuring. And then there's a search tab at the top within our member portal. Make sure you use that to find very specific things within our portal that are most helpful to you. Nobody's going to watch all 2,000 videos in there, so just focus on what you need. We've got a couple more slides on AI and some tools and examples I can go through, but I think I'll go to that in a minute and just kind of switch it up here and get our first hot seat going and see if anybody would like to go first. If you haven't renamed yourself, feel free to do so I can see what type of member you are. And I'm just going to get my screens organized here for 1 second. So Ellen, I remember chatting with you before I got started, but I think you requested to go a little bit later. And then Doug Beck, I see you're in here. We were just chatting through the membership portal. So Doug, if you would like to go first, that would be awesome. And let me scroll down here and try to ask you to unmute. There we go. It should allow you to unmute now, and then we can chat back and forth and kind of see what you'd like feedback on.
Richard, can you hear me okay?
Yes. How are you doing today?
I'm doing well. Thank you for giving me the opportunity to have a conversation here, and appreciate it what you guys are always doing, always exciting, and seeing the improvements in AI and everything like that. So,
Sure.
yeah, I haven't done one of these before, so I want to make sure I follow your process. So, just take me through any questions or how you want me to start off.
Yeah, yeah. If you just want to share maybe like the one or two things you're working on, and like maybe one of the top opportunities or one of the top challenges you're facing. I mean, some people would like feedback on a one-liner. Sometimes it's a one-pager, or a figuring out a strategic choke point that would help them raise capital, or a capital
Sure.
raising strategy they're trying out. Like whatever would be most helpful to you that you're trying to solve for right now.
All right, I'll give a little backdrop, just some context. So, we started investing in real estate about 12 and a half years ago. Came out of corporate IT, working for J&J for about a decade before that. And I've got a lot of process and tech background. I got into the real estate space. We've done a few hundred deals, all different types of stuff, from wholesale, fix and flip, rentals, all that. My sort of origin story was that I got into it, by accident, basically, and I started learning how you could flip contracts and all that. Over the
Yeah.
past, six years, I would say, got more focused on the capital side of the business, and we've sort of refocused our attention from transacting on operational, doing fix and flip or doing rental property investing, to be more of the capital connector when it comes to mostly first position debt, so private credit, basically.
Okay.
I've had the opportunity to work with different groups, but trying to really, what we're doing now is, kind of taking that experience and really trying to compartmentalize, or make it simple in the sense of what we're focused on. And with your inspiration, honestly, real talk, you kind of inspired us about a year ago when I came out to one of your events to focus on the AI side of things. We've done a lot of work since then, specific use cases in our industry, specifically like analyzing real estate deals and also underwriting lending deals, et cetera.
Yeah.
And now we're trying to figure out how to bring this to market in the sense of getting people on the platform that we've been building, and also from the perspective of capital raising. So it's kind of a broad question, but I guess what
Yeah.
are some considerations when you consider my previous experience and kind of the positioning of what makes it different and special, from a strategic standpoint, and then we can get into some specifics. Any ideas or
Yeah.
thoughts around like how we present it?
Yeah, awesome. Yeah, lots of ideas. I just wrote down a couple here. So, one is we have somebody that we know pretty well within our ecosystem that's been doing first position hard money lending for a long time. And because of that, they have institutional lines of credit from like the biggest financial institutions in the world. And so their cost of capital is low, and they have like these revolving warehouse lines of credit. So, if you are having a flow of people always applying to you for these loans, maybe a percentage of them that you couldn't otherwise raise capital for fast enough, or the largest of them that would put you over the top of how much you could put capital to work on, maybe they could be a backstop or a provider of that line of credit just to line something up so you can scale like the access to capital side faster. And
Yeah,
he comes to a lot of our events. So if you want to follow up with me after this over email, like I'm happy to make
I
that
love that.
connection and just see if there's something strategic there.
Yeah, I would love that.
Um,
Thank you.
yeah, no problem. When I in first position loans, I mean, if I sold my business today and I sat around with a lot of free time, which I don't currently have, 1031 deals can have momentum to them, and things can come together quickly. Hard money loans or like first position, real collateral behind real estate lending and getting investors, whether it's a 8 or 10 or 11% return after fees, whatever, is a good business to be in right now. It's gotten more crowded the last 3 years, of course, but it is a good space. And about a decade ago, we bought hardloans.com and hardloan.com. I'm not using it. I don't intend to use it because I just don't foresee me having the free time to do anything there. But it's something else we could follow up on later. It's just
Yeah, it'd
the
be
reason we
cool.
got that is we knew it was Fifth Avenue real estate for people in the hard loan business. So we're like, well, we'll use this eventually, and we just haven't. So just FYI. The other thing is that
Right.
when I think about your business and what is critical, like dodging bad characters, being really careful who you lend to, getting the deal structure right, saving your time on due diligence. Like when people are looking for capital, they're willing to fill out a lot of details, right? Right? Like dealing with the bank is so obnoxious; they make you jump through 150 hoops, right? So a couple things is that we have our Dewey due diligence tool that can help with asking questions up front before someone on your team looks at something. You can just have Dewey look at it.
Okay.
But what you could do is like take a submission and then above it say, these are the 5 criteria that we look for internally. So Dewey, do your full due diligence, but also know these are our values. This is what we care about most. These are the metrics we really dial in on. Here are the submissions that came in this week, or here's the submission that came in today. Analyze it with your framework, but layer on top of it our custom framework. And if you have that in a TXT file, every time a submission comes in, you can be leveraging Dewey and getting a customized due diligence analysis for your purposes. And you
Okay.
also, I'll give you a special email address after this webinar as well. We've set it up just for our paid members where you can actually forward an email over to that due diligence tool and it will chew on it, analyze it, and then spit you back it almost like it's a member of your team. So when somebody
Yeah.
applies, that form submission hits your inbox, you send it over, it sends back the analysis 4 minutes later or faster. Um, does that make sense? Like on a couple of those ideas, I
Yeah.
had one or two more, but I didn't want
Yeah.
to
Yeah.
rattle on too long.
Sure. No, that's good. And I'm cool on just audio and that it's fine. But if there's a way to do video, I just don't know how to do it on this particular webinar format, but it's totally cool. Audio is
Sure,
great. I
sure.
see you clearly and hear you clearly. So
Cool.
basically when it comes to what you're saying, so our strategy, like I've been a part of a fund that was lending first position and they had like credit facilities and things like that. And I'm open
Okay.
to exploring that with you. The
Sure.
position that we're in now, though, is we are inspired by a lot of different inputs from actually a family office down here in Sarasota that I'm very good friends with the general partner of. He had a couple exits and now for the past few years been investing and lending. But his name is John. So he basically inspired me to look at this more from a platform level and thinking of it like how do we create a place where different capital partners could participate and get their guidelines or their preferences, their underwriting models, et cetera, plugged into a system that is basically sort of a marketplace. And then also on
Right.
the other side of it, how do we get, the folks that are motivated to generate income from originating these deals, whether that be brokers or origination shops to use it. So kind of putting
Right.
the whole thing together. again, inspired by you guys, we developed a very simple AI agent that has built into it a handful of sets of guidelines from different capital partners, and then essentially it's got real time capacity to have a conversation based on the guidelines to effectively underwrite the deal from the broker. And so that's
Got it.
kind of our that was our original kind of use case. So like we started investorloan.ai as one of our properties or
Okay.
digital properties and systems.
Cool.
So that's
Yeah.
where, from a strategy perspective, any thoughts on, sourcing deals with brokers and kind of positioning it? That's kind of one of our, at this time at least, we're thinking as one of our main
Yeah.
um, routes to go to get new deals and kind of not focus as much on like direct origination, but more so like indirect and kind of motivating brokers.
Sure, sure. Yeah, I mean, it's always good to do hub spoke type approaches to business, right? So, like, if you raise capital from a single family, it could be great, but if you can win over a multifamily office, then you might get 20 clients or $20 million at once. And so, I would guess with brokers and originating debt deals and hard money loans, it'd be the same. So, yeah, that part sounds like a smart approach. I think that many times when I find people that have success, it's because they either have some relationships that build trust and momentum early on, or they laser focus on an industry or niche, and then they just go deep locally and get momentum locally, and then they start expanding, and then they could build trust with people that are national. Just because it's always easier to convince somebody in your backyard to give you a shot if you can meet them for coffee or lunch and show that you're real and you have all this experience, with a couple hundred deals and the wholesaling background and all of that. It's going to be that much more credible and effective to put that together. I do think that not lending to the wrong person. I would look at what we did with Instant Partner Insights and that AI tool that you can find in the portal, and just look at
Okay.
that because we've done background checks on folks for the verified membership in our club, and sometimes they'll pass a background check but not pass what Instant Partner Insights can find in terms of regulatory disclosures or being banned from an industry, et cetera. So it's just good to do both and not have an AI search replace a background check, but to maybe have it be done up front because it's just easier and faster to do it.
Sure. Totally. Yeah, for us, that's 100% something I want to check out. The use case scenario would be like I was sitting on the front end as like part of the sales team for a fund about a year and a half ago out of the
Right.
Carolinas, and I was helping them generate business down in Florida where I live in
Okay.
Sarasota. And so I was out in the field, like you're saying, pounding pavement, meeting with people, love that, enjoy that, getting out in the field and meeting people, shaking hands, having lunch, things
Yeah.
like that. But the challenge I had is also when I was dealing with direct borrowers, typically the folks that I was reaching out to were pretty good, professional about getting stuff put over, as far as
Sure.
documents, needs lists, et cetera. When I get stuff from brokers, unfortunately, I'm just talking really like they're not usually as professional or put together in most cases. So
Yeah.
I was getting submissions from brokers with like all sorts of stuff all over the place. And so
Yeah.
um, it was a lot of waste of time at the top of the funnel as far as inbound
Sure.
requests. Even though they were inbound, they were not really put together and they were a lot of times didn't
Yeah.
meet the criteria. So I said, well, this is
Yeah.
a pretty common problem. How can I solve it if I'm inside of a fund or inside of a group like that lending? So that was kind of
Sure.
our inspiration, is to more or less qualify before it gets to like an actual appointment. And that's where
Right.
the thing that we built is really designed to be,
Okay.
pre-qualifying the deal. And then the goal is
Okay.
to go like wide at the top from like a referral network standpoint, and showing a lot
Sure.
of people don't know, you probably know because you've been in this space for a little while, it sounds like, with the lending. But most of the US, it's unregulated in terms of business purpose lending for first position debt on real estate. So there's an
Right.
opportunity of capturing, 30 plus markets in terms of states that people could operate out of without any sort of special licensing. So that's
Cool.
where we feel like there's an opportunity there, to kind of
Sure.
capture some of that business. And then there's obviously the
Yeah.
real estate numbers, like agents alone, there's 2.3 million real estate agents, and like 86% of them close less than five deals, in 2025. So they can't earn a
Right.
full-time income. So we're thinking like, how
Right.
do we solve that problem and also bring people closer to the
Yeah.
investor side of the equation?
Yeah. 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 That makes sense. We'll call on Ujjwal Roy next, but Doug, I think like one thing related to your project is kind of how do you use data to figure out what would be like the 80/20 of like 2 million brokers. What are basically the 200,000 or the 100,000, like a 95/5
Right, the right
of
targets.
like,
Yeah.
yeah, and then like figuring out how do you drip on those folks or open relationships there, and then only a percentage of them might refer debt related deals, but some of them might be already. So how do you get that data and how do you figure that out? But a lot of times it comes down to like, if you have the best data and the best distribution, then you're going to win in business. So I think like digging into that and like going multiple layers deeper than maybe others have probably would pay off in today's world with like the amount of messaging going around. You want to make sure it's super dialed in on who's most qualified, you know?
Very helpful. Thank you, Richard, for
Yeah.
the time and for the
Cool.
feedback. Appreciate
Yeah.
that. Thank you.
Yeah. Appreciate you being here, Doug. Good to hear from you. And then,
Likewise.
yeah, I'll try to see if we can unmute the next member here. 1 second. There we go. All right. Ujjwal, if you want to go next and let me know what questions you have or how we could be helpful to you. Thanks for being on here.
Yeah, hello, Richard.
Hey,
Thanks for the opportunity for letting me speak here. And this is one of my first webinars that I'm attending from family office. So looks like a great
sure.
format.
Sure.
So I'm actually raising some funding for my product Hyperscaler.
Right.
It's an agentic AI platform that basically understands the ICP, ideal customer profile, and then
Right.
automates the outreach to that. So our one liner is automate your outbound, or like put your outbound on autopilot, right? So it
Right.
actually does outbound on several channels like LinkedIn outreach, cold calling, cold emailing, social media content farming, uh,
Right.
some other kinds of whatever like channel that you have. We can also automate that, like like paid
Sure.
ads, meta ads, Google Performance Max campaigns, things like that. And then on
Sure.
top of that, we have an AI layer, which we're calling EVA, the AI CMO, that
Okay.
actually is able to look at all the performance metrics from different outbound, and then it actually tells you what works, what does not. So it helps you optimize your outbound strategy.
Sure. Sure. Yeah, makes sense. I mean, one thought that comes to mind already in terms of like if you're raising capital for hyperscaler right now is just that if you can get someone to show it works, that and if that same person is qualified to be an investor, you know, now you have them because they know what you have is real. So even if it's on like a beta level, or even if out of the
Mm-hmm.
12 things it will do, it just does
Mm-hmm.
three of them right now. If it could, one, do a great job on one channel, like maybe it's text messages, or a great job on phone calls, and a great job on iterating the ads to get more phone calls booked. Like in our case, you know, we love having a lead gen campaign where we get a lead in hand and a 5 minute phone call booked on our Google Calendar. And like that works much, much better than just getting lots of clicks to our website. We can get 3,000 clicks and it doesn't really mean as much. And so if you can figure out like, okay, well, what's the minimal viable product to have two or three pieces work, and then you are showing that to people that are worth 10 million plus, 30 million plus net worth, then they'll get excited about using it for their business, and they will be way more likely to invest because now if you build that out, they know their business is going to grow and they'll get their ROI just off of the use of your platform. Plus, they would be potentially an owner in the platform, but maybe you're already doing that. And your question is something different. I don't know who you're approaching currently.
Yeah, so right now we're just raising our seed round.
Sure.
So Hyperscaler, I would say it's a like productized version of the service that I was already providing through my agency, Scale Build AI.
Awesome.
And Scale Build AI, we have like 100K MRR right now.
Awesome.
So we actually proved that this works. We have like happy customers. They're
Sure.
happy with what we have done so far. We have testimonials and everything. And
Okay.
investors can do their due diligence, talk to our existing customers. And you're right,
Yeah.
yeah. It would be great if we could implement this technology on the investors' own businesses. And the good thing is that it works for like products, services, or even like
Right.
solopreneurs, right? If someone is a personal brand and like there has to be
Totally.
a whole back office running their
Sure.
business. So
Yeah.
Hyperscaler can actually basically automate their back office, and solopreneurs can actually, because we're going into an era where we'll see like a lot more solopreneurs, single
Yeah.
people, hundreds of millions of dollars worth of business, or billions of dollars worth of business. So
Yeah.
Hyperscaler can actually run their back office
Sure.
without the need of a single employee, and it's like one dashboard through which
Yes.
you are running
Yeah.
your business. So it would be great to actually implement it in the potential investor systems, even as a
Sure.
beta, to show them it works. And
Yeah.
yeah.
Well, a couple things come to mind. One is because a lot of entrepreneurs know that companies can scale with less people. One hard thing
Hmm.
is at the seed phase is that investors expect a lot to get done, like before you raise money, and a lot to get done with just a little bit of money, because they know with one programmer, with vibe
Hmm.
coding, et cetera, that a lot of things can get done and put together for like a pretty great prototype very quickly. So it does add some pressure of like what the minimal viable product does. But I think that the most credible thing about everything you've said so far is
Hmm.
that you have a seven-figure business scaling companies with your agency that leverages AI already.
Hmm.
I'm sure some investors will say, well, I'm comfortable investing in a company doing seven figures in revenue. I'm not
Hmm.
so comfortable with me taking the risk in this new company. And then if it fails, I lose all my money and you still have your seven-figure business that's doing well for you. They might be way more likely to invest if they also get a little piece of the profitable business, or if this project fails, then there's then a 2% royalty on your core business to pay back investors until all their money is paid back over time. Or can they be combined into one? Maybe yes, maybe no, for different reasons based on like how the company was formed and who the partners are. But I do think that like having those connected, and saying that first, that you run a seven-figure growth agency that
Hmm.
already leverages AI, and
Hmm.
now you're expanding to launch hyperscaler. Like at the very least, I would just emphasize that even more, because I think as a verified member, which we thank you for being, we've connected a couple times before in the membership portal
Hmm.
and over email. And the way you explained it this time, I think that just stuck out more to me. But
Hmm.
do you think there's something that could be done there just to make investors kind of rest easy at night, knowing that like they're going to be made whole, or that it's not as risky as if, like, imagine someone comes on this webinar, they're not a
Hmm.
verified member, I have no idea who they are, and they're like, hey, I've got this idea of like creating this AI tool. It's going to help people grow and do this with ads and do this with this and this with that, and it's at the seed phase. Maybe people will be like, okay, maybe you could pull that off, but because you're you and you've been doing it at a seven-figure level, massively more credible. Now, if you can structure that into how the deal is sold to somebody, maybe using our deal structure ninja AI tool to think through how that would work and get 10 options and 10 more options from that AI tool in our member portal. I don't know if you're open minded to that, but it could be something to explore.
Okay. Yeah, I think we can definitely structure the deal like that so that the investor can be made whole, and we can definitely give a like money back guarantee with that percentage royalty that you talked about in case
Sure,
hyperscaler fails. There's a very little
sure,
chance that
sure.
hyperscaler will fail, especially because we're breaking the cost of outbound marketing low by like 10 to 15x. And the other thing is
Yeah,
that the product is already built, like we have
yeah,
already invested in building the product,
sure,
and the money that we're raising right now is to just scale our GTM
sure.
and kind of like be the leader in this automated AI automated outbound martech.
Sure. Makes sense. I think like one thing that's good for like the hundreds of people on here to hear is that in the investment world, unless you have an insurance product that's been blessed by the SEC, FINRA, you're never allowed to say that something's guaranteed. You can add more security to it and say you have this collateral, or we have this royalty that then kicks in this scenario, but it
Hmm.
still doesn't guarantee things, because God forbid something happens to you health wise, or the business would something happens to the business, then it's not like 100% guaranteed. So saying the word guarantee in the investment world is like saying the word bomb on an airplane. You just, in general, you just don't do it unless you're like in the insurance space. Just legally, there's problems with that. And then it's important for everyone else to hear as well, like to get a securities attorney to file blue sky law state filings whenever you raise capital, and have proper subscription documents, which you probably already know. But there's just a lot of people who go about their first capital raise, and sometimes it's not structured correctly, or like appropriately with an attorney, and they skip those steps and just do something with AI, and then it creates a mess for them later. But the other thing to note is just that because your solution with hyperscaler could do so much for somebody, it might be a big ask for them to change how they do these 9 things and now move it all over to hyperscaler. So just from like a sales perspective, I would guess that winning them over and being like, hey, why don't you put your foot in the door and just look at starting with us in this way, and let's just help with this. You'll see the positive ROI, and then we can expand to the full package. And by the way, just on what I can see on Google Ads and Facebook, Instagram ads already publicly, I can see this, this, and this, but your competitors are doing this, this, and this. And typically what we've seen is that if you're only running that one ad type, you need to be A/B testing, minimum 5 ads at a time, if not 20 or 30 ads at a time. And that's something we can immediately get in place. And if you want to, you can keep your ads in place, and then we'll compete my ads against your ads. And then you're going to see how much more effective it is to leverage AI, leverage somebody who's focused on, the A/B testing at a deeper level, more robustly, more routinely, etc. Does that make sense?
Mm-hmm.
Yeah, I think that
Yep, and
might help.
that's
Yeah,
exactly how our pricing model is right now. Like people do not have to select everything, and not
sure.
every services apply to every businesses. So that's
Got it.
why like our pricing is like block pricing plus the token usage. So it's a minimum per
Okay,
service plus the usage pricing or meter pricing.
got it.
So like the starting price is like $249 per month, and then it
Sure.
scales as you add more and more services to your card.
Okay, cool. Awesome. Yeah, that sounds great. Great. Well, I appreciate you being a verified member, and I'm sorry we didn't get to connect more last week, but if you have any questions on the AI tools or the event coming up next month, etc., just let our team know, of course, and hopefully we'll see you at the Dallas event or maybe at one of our August workshops coming up.
Sure. Yeah.
Sure.
Thank you.
Yep. Thanks for being on here. And I see Eric Runge, you're on here as well. And I saw you sent me an audio note this morning. I apologize, I haven't even listened to that yet. So it's probably about being on the webinar here. But I'll click the unmute button here. How could I help you, Eric?
Yeah, thanks, Richard. Yeah, no problem. I sent it sort of last minute.
Sure, no problem.
Shut my door here so we can talk freely. Yeah, so let me give you a macro overview of where I'm at, what I've implemented, and then you can
Sure.
kind of tell me where you think maybe next steps are.
Awesome.
Okay, so I read your capital raising book, pretty much built, as far as I could tell, the whole funnel that you discussed. Have a
Okay.
LinkedIn newsletter for my firm, which is Veritas Bitcoin Strategies, LinkedIn posts, YouTube videos, wrote a book, have another one in production, and 4 or 5 more on the way. I've been going on podcasts, TV show
Okay.
slot, and other stuff that I can't think of right now.
No problem.
Okay, so that's all the pull level. And then
Okay.
you and I spoke a few weeks back, and you mentioned the sort of push side of things, which is sort of lead capture. So I built
Right.
lead capture into my website. So to download my book, you have to fill in your name, and then I get a little lead, and I can call them, that sort of thing.
Sure.
And that's where I'm at. Going to tons of in-person events per year,
Okay.
your events, and then
Yep.
also the Money Show, which is a different type of event, but
Sure.
good investors there.
Sure.
So anyway, that's about where I'm at so far. I've cracked the code on networking and getting around my ideal clients, and I'm
Right.
just sort of still working on getting them to notice. I think they're noticing, but I also think
Right.
Bitcoin is not super exciting until it runs again. And then I suspect
Right.
everyone's going to want a piece of it.
Yeah, totally. One thing is that if what percentage of your energy is going to actually working with a wealth advisor who could refer many people to you versus the actual individual investors? I'm just curious on that.
Yes. Okay. That was something that you mentioned on the last webinar. And so
Yeah,
that is starting to be a thing. My current book I'm writing is Bitcoin for Financial Advisors.
got
And
it.
then I'm writing one for attorneys and then CPAs. So we're
Got it.
definitely moving in that direction, and
Okay,
multifamily offices as well.
got it. Okay, cool.
Mhm.
So like basically on this slide, like these 3 areas of trust, like Do they trust you and know you? Do they trust Bitcoin? Are they familiar with the industry, et cetera? These really determine whether a lot of deals get done. And since your background, I believe, is in the wealth management space or related to that space, I do think that you could relate to and talk with financial advisor, wealth advisor types, better than the average person. So just one thing to keep in mind, because like if you win over one of them, you might get 2 to 3 or 5 or 10 clients. So you get like an outsized, ROI. But
Yeah.
there's a couple bonus slides here related to these next 3 ideas here. Is just that if you look at these stats, like 2026 here is a guess, but the number of emails going out per second is skyrocketing because there's AI tools out there where you can send out 100,000, or I spoke to someone at one of our events last week, they're sending out 1 million emails a month. And so like even emails to people that have us on retainer to help them run their family office, we get fewer replies to those than we used to, right? It's like, that's how much of a problem is this. So I think that, calling anyone who's worth emailing, also calling and just going out of your way to do that. I bet you a lot of your competition will not do that. And there's 100 times more emails than phone calls going on in the industry, right? So I would also look at your top couple hundred leads. It could just be your top 50 leads or 100 leads. And for $2 a month, you can be sending them some materials or education. Because like how many things do people send over email? But like in a whole month, I really get 0 things in the mail that are just pure value add, and it just be a way to stand out, whether it's print or doing phone calls or text messaging, or meeting in person. And it sounds like you're doing some of that already, but focusing on those local leads or ones that you had like a great connection with at the event. And then having those alternate modes of following up would be something I would focus on. But also like as you get to know your potential client and that like especially the more sophisticated ones like wealth advisors and even founders that are worth over 10 million, they may know who Howard Marks is, and he's like a multi-billionaire founder of Oak Tree Capital. And Howard always says like, you want to be investing when others think something is kind of boring or dead. And you should be more fearful when everyone's super excited that NVIDIA is doing this or SpaceX just doubled. Like that's when you should maybe be a little fearful. Maybe not all the time. Like general advice never works like 100% of the time. But like you may want to lean forward when something's beaten up a little bit, and you may want to lean back when it's going crazy, right? And so I think that like it's related to the 3 trust curves. It's like you can appeal to somebody they respect, and you can say, a lot of good advice is actually hard to follow. Like, don't eat any processed foods or any chemicals, just eat whole foods. Yeah, easy to say. Nobody on planet Earth does it, in my experience. And same thing with investing when something's not hot. It's like, you're like, this is an actual case study of investing when something is out of favor and boring and no one's paying attention to it. So like right here is a chance to do something that's not following the herd. And not chasing the top, which a lot of meme stock type excitement, is driven towards these days in general. So I don't know if any of those ideas help, or if you want to kind of change to another layer of that or some challenge that you're facing related to that. But those are some ideas that come to mind.
Yeah, it's helpful. And I appreciate that you're bringing into the open, basically when everyone's running from an asset class, run to it and vice versa.
Yeah.
That's a sharp observation. I think the layers of code yet to crack for me, because like once I figure out the mission, I can crack the code pretty easy. The hard part is figuring out the mission. And the mission being, so I've learned that my book creates massive credibility and opens doors that it like never would have before. So I'm almost just laying back and letting it do all the work for me. I think writing the books specifically for real estate investors to understand Bitcoin, financial advisors, CPAs, attorneys, those will actually be my top 3. Will help a ton. I've noticed in the Bitcoin world, that's where the biggest blue ocean is. And then if, to your point, if you find Bitcoin financial advisors, those are unicorns. And so those, when I connect up with those guys, they're great. And I'm getting invitations to speaking events and that sort of thing. So maybe the next step is looking for a sort of Bitcoin friendly or Bitcoin understanding multifamily office. Anyway, comment on any of that if you like.
Yeah, what is your comment when someone says, "Oh yeah, I have some Bitcoin already," or like, "Well, why don't I invest in an ETF or directly?" What is the differentiation point, or kind of like the one liner to bring them in to work with you instead?
It's never a push style one liner. It's always more
Sure.
questions like, how do you
Okay.
hold it? And often it's,
Sure.
Coinbase or Binance. And then I'll just drill down and ask, well, do you hold your own private keys? And they will usually go, what's a key? And we'll talk about the danger of that. Um,
Okay.
or if they hold the Bitcoin ETFs, we talk about the difference in ETFs and the
Right.
like the dangers of proof of reserve or not proof of reserve, and that all ETFs are not created equal. Or we discuss the volatility. How does the volatility? So it kind of depends. I don't have a particular one liner per se.
Sure. Sure. No problem. And
Hmm.
then what about if you sit down for a cup of coffee and the goal at the end of the cup of coffee is to convince them they should work through you versus one of those other options you just discussed? Like, what are the three things that you would want to make sure they understand? Like, for example, like, hey, if you invest in Bitcoin through me, what you're getting is diversified exposure to these Bitcoin driven assets, or you're getting a more secure Bitcoin allocation as a wealth advisor for your clients, or like, what is like at the heart of what you're trying to communicate?
The heart is, do you know that fantasy that everybody asks themselves that if I was on an airplane and both pilots died and they asked me to fly it, could I land this plane? I don't know if you've thought of that, but I think about that. And
Yep.
everybody knows that we would love to put ourselves in that seat. And I know that I would crash that plane and kill everybody on board.
Right.
Bitcoin is like that. And so, what I want to tell people is you think you can own Bitcoin and hold it, but it's a very dangerous asset if you hold it wrong. And so, you need a pilot and an advisor. You have an advisor on everything else, on your assets, on your real estate, on everything else that you're not an expert in. Bitcoin gets mistaken as something that you can easily buy and hold and
Mm.
do well, but there's a lot of unknown unknowns. That's the general thing I want to convey, and then we can dive into what those are.
Got it. Got it. That makes sense. Okay, cool. I
Hmm.
mean, one thing that is probably like a very chewed on area, but I'm surprised sometimes that we're able to get assets in this area is just looking for on Google keyword search or word tracker, like how many people are looking for Bitcoin advisor, Bitcoin consultant, Bitcoin investment advisor, etc. For someone that knows they need that and they're literally looking for, an Eric right now. And in
I'm
some
not sure that
markets,
category exists in people's minds yet, so maybe they don't even know to look
yeah,
for it.
I'm not sure either. I know that millions, if I mean, I think tens of millions of people have allocated to Bitcoin, and there may be some percentage of a percentage that look for that, and or there may not. And in the future, that might grow, or it may not. But if for $10 on GoDaddy you can get a direct match domain name, or if you can make what you offer very clear with a domain name, even if that idea wasn't in their mind already, but then just by seeing your domain name or brand, they get exactly how you would help them. It's just always something I double check and I just use
Okay.
those keyword search volumes just to see is there any searches being done where they're literally looking for what I offer. So for anybody
Oh,
listening here, I would look for that. And that's why we own familyoffices.com and capitalraising.com and investorclub.com. And in the past, we have gotten, three-word domain names sometimes, not like super often. Would encourage everyone listening to look for a two-word domain name, but it's just something to consider
yeah.
to see if you could like catch people like while they're looking for a solution in the space.
Okay, so that brings up something that I think is really sharp because I changed my DBA to Family Office Bitcoin. But when I go
Okay.
to an event and they read Family Office Bitcoin, their first question is, "Oh, are you a family office?" And I realized I thought they would get it immediately. I realized I need to change my name to Family Office Bitcoin Management. That would convey it. That's like your hotel to
Got it.
apartment conversion example. And
Yeah.
so that's right down the middle of what you're saying. I need to look for Bitcoin Advisor or Bitcoin Management as a key keyword search term,
Right. Right.
and probably
Yeah.
change my
Potentially.
DBA.
Potentially. Yeah. And in some rooms, 95% of people know what a family office is. In some rooms, 25% will. In most rooms with sophisticated business owners and private equity related folks, most people will know what it means. But also, as something gains traction, I would not hold back on having a DBA for some types of rooms and a different DBA for a second type, right? It gets kind of burdensome if you've got 4, 5, 7 different DBAs, but having 2 or 3 and knowing that 1 or 2 is an experiment and see if it takes off, and just being transparent with what you do overall as a company, but not having the doorway be confusing to people in whatever room you're in, I think is an important consideration if you're trying to build a platform,
That's a great idea. Thank you. That kind of almost gives me permission, because I was like thinking, nah, I can only have 1 DBA, but says who?
No, you can definitely have multiple, for sure. Right. So we have many websites and many DBAs, and, but my strength is in like positioning, lead gen, marketing, and education. And so I'm okay with that complexity. Some people would never want to do that, but yeah, I appreciate you asking the questions here, and glad to hear that when you came to our events, you built this thought leadership funnel, and it was kind of a pull strategy to pull people into the funnel organically, but also, in speaking with you over the last couple of months, and seeing what we do, and that I think the main point that we exchanged recently was just that when you build a thought leadership funnel, which naturally attracts leads to you, then anytime you meet with anybody, you're more articulate, you have more follow-up materials to give them, you're more credible, you have more authority, which means you're more influential. You're also better at speaking, doing podcasts, etc. You also can create the next book, the next resource that much faster. You could create infographics from your books, little shorts on YouTube, longer videos if you wanted to, be equipped to do a 2-hour interview if you want to. But on top of all that stuff, you put all that to the side. Now, if you just do a little bit of push marketing in your local market, or in the 1 or 2 cities you spend the most time in, and this should be applicable to everybody listening, your push marketing will do better if you have amazing pull marketing, because you can see what worked here and use it here. You can see what worked here and package it up and have a free giveaway over here that's amazingly powerful compared to what everyone else is saying in their ads on whatever platform you're advertising in. So the push marketing and the pull marketing, they both get better the more that your thought leadership is dialed in. And then when someone opts in over here, they get rich resources from your pull thought leadership funnel.
Yes.
So only a percentage of people listening will understand everything I just said, but I think it's important for people to hear. It might be helpful to someone.
Well, they should read your capital raising book, because it outlines it all.
Yeah, totally. Yeah, just capitalraising.com. You can get that free book. And then you'll see the 5-step system to raising capital in there. And we do capital raising boot camps a couple times a year. So to see our dates for those coming up, just go to familyoffices.com. But anything else real quick, Eric, before we go to Jeff next?
If people want to download my book, they can go to familyofficebitcoin.com.
Awesome. See, nice and easy, right?
Thanks, Richard. Appreciate your time.
That's awesome. Yeah. Thanks for being on here, Eric. Appreciate it. And thank you. Jeff, I just pushed...
talk soon.
Yeah, you too, Eric. I just pushed the unmute button on yours, Jeff. Jeff Shada, if you'd like to try to unmute there, it should let you. And then just in case you have stepped away, we could next have Margaret Sweeney come up. I'll push unmute on yours, Margaret, as well. If you want to push unmute on yours, that would be great. And I'll also start to look over questions here. Oh, and it looks like Al is here as well. 1 second. And then I've got a couple of slides I'd like to cover a little bit later if we can, just to make sure we communicate points here. Yeah, as a non-member, we're happy to call on you, James. We just try to go through kind of our verified members first and then VIPs. There's a question from Sal saying how family offices are looking at early stage venture funds, specifically emerging managers. Sal, I would say that a lot of it comes down to the trust in you, right? Anyone can put anything on a piece of paper, and it literally means just about nothing if they don't believe the person who the paper came from, right? If they haven't met you in person yet, they're probably not going to invest more than $5,000 or $10,000 or $20,000 unless you have an amazing video, an amazing track record, which they could verify, and have a great data room. So I would put into place everything that we recommend you having in place, from capitalraising.com, the 6 things that everyone messes up when raising capital that we covered real quick, when I was showing my slides. I put all that in place. But even with all that in place, you will raise almost $0 if you can't build trust, build a relationship, and show how you're adding value and show how you are making the world more effective, making somebody's business get more leads or helping manage the risk and opportunity of Bitcoin or whatever it may be. So if you're raising a VC fund based on sports, I would focus on pro athletes. We have NBA, NFL pro athletes at all of our events. We have UFC players, MLB players, NHL, WNBA players, etc. So I would focus on pro athlete investor networks, pro athlete reps and agents, sports agents, but then also people that are local to the sports teams you're looking to acquire or invest in, or the stadiums you're investing in. So I hope that's helpful to you. Um, let's see if anybody unmuted. Otherwise, we will. Oh, Margaret looks like she's ready. Are you ready, Margaret?
Yes, I am.
Awesome. Thanks for being here.
Thank you. Yeah, so a question I have is how do we get to people that are still willing to allocate to single managed accounts in the managed future space?
Sure. Yeah. Well, I think there's a couple different answers to that. One is because I don't run like a managed future space, but I also don't run like an early stage VC sports related business. All I have to draw on is from just watching our community over the last 19 years. And one thing I find consistently is people may have made their money in auto dealerships and then they come to our event and they say, yeah, we're looking for some passive income investments, maybe some real estate, maybe an operating business. And then they meet someone at our event that is like an Eric or like Jeff coming up next or like yourself, and they just sit next to him during the event or meet in the lunch line, whatever it might be. And out of everyone they meet, they really connect with that person and just two or three other people and say, wow, this is super sharp. That makes a ton of sense. Or I have nothing like that in my portfolio, and I could see that operating completely differently from my life settlements or litigation fund investments or just apartment building, multifamily investments, etc. So a big part of it, because like when you're raising money for a sports VC fund, you can go to pro athletes. When you're raising money for auto dealerships, you could go to people that have owned auto dealerships before and they would add massive strategic value, but you don't have to. People are familiar with how our auto dealership works. And so when I showed the three trust curves here, I'll bring it up on the screen again to make this point. Basically, there's a different challenge to every type of capital raise, right? If you are raising capital for a VC sports fund, like we had a question on from Sal, I think it was, okay, well, the industry trust is very high for someone who made their money in sports because like you don't have to explain to them how the industry works. They get it, but they might not know you at all. In the future space, my experience has been that almost nobody understands the industry. Almost nobody understands how to invest in futures themselves or how that works. And so the futures funds that get invested in are by institutions, by wealth advisors, RIAs, multifamily offices, or sophisticated traders from Wall Street, from like the finance industry. And then otherwise, it's just building the relationship and explaining how the industry works. And so that's why people always start with friends and family, because there's trust in the leadership at such a level that they could be confused by the opportunity and confused by the industry and still invest if the trust in the leadership is super high. And so a lot of education might need to be done on futures. And I would say out of, like for a good example, I think this is representative at most investor events and family office events. We have 700 and some paid members in our club. And I can't think of a single one that offers futures as like their investment offering. There probably is one or two, but I can't. And so you could read that one of two ways. Like, oh, okay, this club's like not really built for me. But like the worst thing in the world is to have 900 competitors, right? And just offer the same thing as everyone else. So it's about how to get around that challenge and educate and explain, build that relationship in person, even if it's not through our events, just in your local city, wherever you're based. So that would be part of my answer. I don't know if you want to ask it a different way or explain the challenge or something.
Yeah, we're just, exploring ways to raise capital. And
Yeah.
I guess one thing that's come up is these search databases.
Right.
Databases. What do you think? Do you think that's helpful. Like ones like
Yeah,
Dakota or Prequin, FinSearch. Have you
right.
seen a lot of success with those search databases?
So yes and no. And we're super familiar with them because we own familyofficedatabases.com and we've been in the data business for 15 plus years. So sending out an email to thousands of people, a blanket email, like is pretty much going to get you zero results, I think. Like it's not going to be helpful. Using data sets so that anytime you buy a plane ticket to Denver, you could set up a couple more meetings in Denver. Or if you're going to come to a family office club event, like in Dallas coming up in July 16th, we have a $100 million summit. If you're going to be in Dallas, who's in the DFW greater area that you could meet with? And now that one plane ticket hotel expense, we start our events at 10 a.m. and we're done at like 5, so people can fly in and out the same day. But usually, like when you have a sunk expense, it's like, why not add on a breakfast meeting or a coffee meeting or invite them for lunch or invite them for free to come to our event? Because allocators that are just allocating, they're not syndicating or raising capital, they don't have a fund, get to come for free. So basically, if you can leverage the data to set up more meetings and build more genuine relationships, especially with those local to you or in cities you go to all the time, that's the best use of the data. And the worst use is a blanket outreach pitch. Another use that almost nobody does, I think that less than 1% of people who buy the data use it this way, is you can take the data, upload it to Facebook, Instagram, or LinkedIn as a audience to retarget, and any accounts that match that could get retargeted, but only a percentage of those will match on social media. So the other approach is to create a lookalike audience that meets the attributes of those investors, and then target that group and have that group be who you're showing your opt-in advertising to or your offering to, if compliance allows you to do so. Typically, there's a way to make compliance happy, whether you're sharing just an infographic on futures or something educational or a book or a talk or a podcast you gave or something, and be able to retarget via social media. But that's the way I would look at it. And the default way people use such data is just to blast out a newsletter, blast out the performance updates, and then they're like, and they don't get a lot of results. And the other really funny thing, just because like we've been in the data business for so long, it's super interesting to see this. Like people will get the data and be like, oh, I reached out to like 100 investors and like no one replied. Like this was not helpful. This was bad. It's like a waste of my money. And sometimes people have that view, and it doesn't even occur in their mind that the data is literally just contacts that exist on planet Earth. Like they don't owe anybody a reply to anything. They get 800 emails a day. So it's like, what was the subject line? Was there an attachment? Was your face on the email signature? Do you have a killer one-liner underneath your email signature? Did you write them an essay versus write them a 2-line email? Did you offer them value first, or are you straight up pitching their fund out of the dark and they have no idea who you are and no context around it? Did you send a pitch deck that was 92 pages long, or did you send a one-pager that was super compelling, right? Did you say something unique, or did you say something like everybody else in the industry, or confuse them because you're in an area like Bitcoin or futures that could be confusing, right? So those are like huge considerations, and you'll get literally 10x response rate if all of that is super, super, super dialed in versus like not dialed in. But people put all the responsibility sometimes on like anyone else around them, not the saying that's you, but it's just kind of comical to see that sometimes. That like what you send, it's like sometimes 1,000 times results difference based on what gets sent out as well.
Yes, that makes sense. Thank you.
Yeah, and we help with all of that, meaning we have whole workshops on capital raising. We have workshops on influence and persuasion. And Doug was just asking if we're recording this webinar, and we are, and it will be in the member portal. And you'll be able to search for hot seat or sort by webinars, and then find the rest of the webinar if you missed the first part of it or if you missed some of it later. But Margaret, if you have any other questions and you want to shoot an email over to me, it's just richard@familyoffices.com, and then would be happy to answer your questions there. So David's feedback was like zero success with databases. They just take your money, don't do it. I know this from experience. I mean, we've had people get $30 million checks from cold calling on the databases, and we've got a video testimonial of a female real estate developer who did that in the first 18 months using one of our data sets. But you're 100% right, David, that it is all about building relationships. So like the only good use of the data is to build relationships, right? But knowing that all of these relationships exist is helpful in building those relationships, but you have to use it with that exact perspective, David, or I 100% agree with you. And I call anyone who's worth sending an email to, you also have to call, because I get 700 emails a day. I only get 4 to 7 voicemails. It's literally 100 times more competitive to send someone an email than a voicemail. So if you're only going to do one of the two, like send a call, like make a call and leave a voicemail and reference your email so they can look up your email, and then you're in their brain. Like almost everyone gets their voicemails transcribed, and even if not, they'll listen to the first 20 seconds of their voicemail, like, oh, cold caller, oh, political, whatever, garbage, scammer. So those first 30 seconds, like many investors on stage at our events say, you've got like 5 to 7 seconds to get their attention. Otherwise, they're on to the next thing, because they have thousands of things coming at them every day. Slack and WhatsApp, on email, on voicemail, everywhere. So super important to keep all that in mind. I know we have some other questions coming in I'll get to in just a second. But Enrique, I see that you're on here and you are one of our verified members. And I see Jonathan Wilson's on here. So Enrique, if you want to go next, I can take a couple quick questions from you, and then we'll work our way down this list that Jennifer's helping me with here.
Yeah, hey Richard, thank you so much. Quick question, well, a couple of questions. One, on a 506B, as in boy, would you be
I'm gonna go take that interview.
so on a 506B, do you think we're okay? I guess I'm asking for legal advice, but maybe just more an opinion. You think we're okay speaking about a 506B on Instagram or Facebook, as long as we don't push or boost the post? Because technically they're our community, our friends and family, as long as you don't boost outside of that. What's your feeling on something like that?
My feeling is that I always play it on the safer side, and you'd have to talk with your attorney, but in general, a safer side would be like, I've spent all this time in this niche and we've learned so much about it. And before you meet with anyone in the space and before you allocate a dollar into any piece of real estate, there are 15 things you should look for that will eliminate 99% of things that people pitch you. To get that list of 15 that you can put into your LLM or save to memory in your favorite AI tool, or just have at your desk as an investor, just shoot me a quick note and I'll send you those 15 things. And then like, you're not selling the fund, you're giving them something of value. And then you're not advertising like, invest right now, click here and subscribe. You're saying like, here's a piece of value. If you want this warm chocolate chip cookie, just raise your hand and I will give it to you, no strings attached. But I will follow up with you and, have them opt in properly, et cetera. So that's the approach that I would take. If it's anywhere close to like violating some rule, I would be more about your expertise. And like this strategy came up with hedge funds in the 90s, because hedge funds were, Reg D, have to be an investor you already know, have to be someone who's accredited. And then a lot of hedge funds were told by their attorneys, like, no, you can't go on CNBC. No, you can't write a book. No, you can't say anything publicly. And then meanwhile, there's people on CNBC who run hedge funds, but they're talking about the market and interest rates and what they're seeing and trends. And they're talking about their expertise. They're not pitching that someone should subscribe right now on CNBC and become an investor in their hedge fund. So part of it is working with an attorney that will help you navigate all that versus just say no to everything you ever ask them to do.
Got it. And then a second part is, I was speaking to a syndicator, real estate syndicator like myself, who said, hey, you've got no shot with family offices because they want to see at least 10 years of a track record. We only have 3 years of a track record. What's your take on something like that? He was saying, unless you have audited financials and a track record of audited financials, do we have no shot for 7 years, or what do you think?
Now, for sure, that statement's not true, because, well, first of all, the space is a little confusing, because somebody could be worth hundreds of millions of dollars and not have a family office. Somebody could be worth $10 million and they say they have a family office, but it's really like a virtual family office and like very small. Somebody could be in the middle and have their own single family office. And so the point is that to say like, oh yeah, no family office will invest with you. It's like, well, you're saying like no ultra wealthy family will invest because they all want audited financials. Like I've never seen a fund with less than 100 million AUM that has audited financials. I've never once seen a company. Actually, I met one recently in our club, a 7 million in revenue, and they have audited financials. And I was like, good job. You are more institutional quality and you will raise capital faster with audited financials from a known institution, like no doubt. But that's very rare, like under 30 million, under 50 million in revenue, unless someone's going for an exit quickly. Like nobody gets audited financials when they're doing like 3, 5, 10 million a year in revenue. So, and they raise capital from family offices all the time. So it's certified not true what they told you. But will someone invest on the exact same terms with somebody who manages $5 billion with audited financials, is publicly traded, and you can't even negotiate the terms? And the terms are what they are unless you're CalPERS, right? And on the other end of the spectrum, it's like, if it's more risky feeling and not a startup, but you have 50 million or 150 million, or in your case, I think it's 300 or 350 million of AUM and a couple dozen deals of experience, like it's in the middle, then it just comes down to who is the investor? Are they looking to put in a small check or a larger one? If they're willing to be a good percentage of the deal, like the number one strategy to make massive progress on any capital raise for anyone listening is to find someone who could add strategic value or is big enough to write a big check and give them sweetheart deal terms that your attorney has approved and is kosher to do, and have them come in and help get a big chunk of the raise done. And you make it worth their time by giving them either a little bit extra collateral in their share class or under their terms in the LLC, whatever it is. And maybe they get a little bit more advisory board type role, or maybe they get a different valuation, et cetera. And that is how you get things done that you shouldn't be able to get done, is through the deal structure. So again, you could use Deal Structure Ninja, one of our AI tools. You could use Clara, our AI agent that helps with all the different pieces of the 6 things that most capital raisers mess up. And you could use Hyper Intelligent, which is our AI tool that has 20 different AI tools baked into one, and it will vote on things and give you feedback and just like point out different perspectives. And I think between those tools, it could help you navigate and get deals done with family offices you wouldn't otherwise. And then the other thing that some people might need to hear that could be helpful to you as well is that, let's say that what they said is 80% true, and which I don't think it is, but like, let's say it is. And at least for $1 billion plus family offices, they're going to want to see more audited financials, longer track record. Okay, but if you find yourself in a meeting and you're developing a great relationship with a family that's worth 50 or $100 million, you want to have things buttoned up, not necessarily audited financials, but a great structure already thought through, great materials that are concise, a really unique position, a one-liner, your due diligence things all organized. So when you stumble into a meeting on accident that you didn't even know was going to happen that day, it's obvious it's not your first rodeo. Everything's buttoned up. It's very clear. It stands out night and day from other people they interacted with at the event and from other people in general. And you always want to be ready for like a half turn more institutional than you plan on even raising from. If your target is like 30 to 50 million or 100 million net worth families, well, if you get in a room with a $500 million net worth one, you don't want to fumble that ball. You could really level up your whole platform. Does that make sense?
It does. And since you mentioned Deal Structure Ninja, wow, what a tool. I used it the other day for a syndication, and it gave me
Nice.
such a good idea. And
Awesome.
and Vedi also did a great job. You
Awesome.
trained
Yeah,
them well. You
Vedi,
trained them well.
that's awesome. Yeah, I appreciate that feedback. Yeah, Vedi is our, it's like the real estate cousin to Dewey, which is our due diligence agent. Vedi will stress test real estate deals and look at a level of occupancy that would break a deal, an interest rate change, a cost overrun. It just helps you with like pro forma financial analysis of real estate deals, just for people listening that don't know that. But yeah, I appreciate you that feedback. I didn't realize you had started using those, but that's awesome. So if you have any questions on like the AI workshops from last week, we've recorded, we're editing, we'll have that released really soon. But if anyone here has questions from the AI workshop last week and the super intelligence operating system or the AI tools we're talking about, feel free to reach out to our team or just put them in chat and we'll try to answer them before the webinar is over.
Thank you.
Thank you, Enrique. Appreciate you being here.
Yep.
Awesome. Jeff, if you want to go next, that would be one option. Also, David says, oh, the only database I'd trust is Family Office Club. Well, I don't know about that. I mean, you don't have to say that. It's overly nice of you, but your point is straight on, that the relationship is what matters, right? Heather's asking, can you share more about how to upload a data list, social media? I don't have time to screen share on that right now, but when you start an ad, like on LinkedIn, then you can say create custom audience is usually how it is on most platforms. And then create custom audience, you can upload a customer list, or create a lookalike audience, and there'll be some options to go through that. I would just go into Claude or GPT, whatever you use, and literally say, talk to me like a 10-year-old, something that I say to it often. Talk to me like a 10-year-old, make it deadly simple. Where exactly do I click to create a lookalike audience and target just people that look like the people who have already invested with us? And I usually have a separate campaign that's like, all right, only target these people with this job title in this city, this many employees, etc. And one little insider trick on that we've had to learn the hard way after spending, $7 or $8 million on, social media ads and digital ads, is that selecting people with a job title like founder, chairman, CEO, etc., investor, but employees are 2 or more, so you don't get the solo entrepreneurs that may be less wealthy. You may or may not want to do that because it might cut out some that just are solo entrepreneurs and super wealthy, but many people do have employees once they get to a really scaled up level, of course. So just something to consider. Jonathan Wilson, I see you're on here. Let me see if I can bring up. I'm not seeing your name pop up for some reason. You might have had to run. Let me see what other questions come up here. John Orlando wanted to ask about writing pitches that are custom for each investor. My client has a disruptive sleep apnea product. Great, awesome. So I would try to approach the investors via email with a customized approach, of course. It's going to work better, but I wouldn't customize the pitch deck or one pager unless it was a blue chip anchor investor type that would just be a game changer if you close them. Then I would do everything to customize everything for them, all the way down to the deal structure, the legal docs, the valuation. I think everything needs to be customized to that investor. Personally, let's see here. Raising money, please reach out. Okay. And I look at the Q&A questions here, and then Al, I see that you're on here from Angus. So I will push the unmute button on yours, Al McGregor. If you would like to unmute yourself, you can ask a question or two. Feel free to. See that you're still on here. And then Ellen, if you would like to ask a question or two, I'll push the unmute button on your name. And then I'll check what other questions I've missed here. Yeah, Jan, thanks for being here. Oh, yes. Now I can hear you. Hey, Ellen.
Perfect. Hi, how are you? This is very
Good, how are
timely,
you?
so thank you.
Awesome. Yeah, appreciate you jumping on here.
Yeah, hopefully you got a chance to quickly look at my at least tear sheet. But DAE Capital, we're basically solving the #1 bottleneck right now in AI, which is power. You can't watch the news or go on LinkedIn or Facebook without hearing about it. We're
Right.
acquiring land, building power, cooling, network infrastructure to support the AI data centers. But more importantly, for our investors, we're converting their tax liability into income producing digital infrastructure assets. So people who want hard assets can redeploy. Instead of paying taxes, they can invest. Our
Right.
first fund closed in December. We raised a little over 150 million. Our second fund closed in March. We closed it right before we did our public launch at the NVIDIA GTC conference. The
Okay.
world then heard about us, and our dance card has been full ever since, as you can imagine. That fund put us at about 300 million AUM. Our third fund that's open right now is getting ready to close because we're having a couple more public announcements about who our offtake agreements are signed with, and a public $30 billion company that wants to double the size of their business by banking on us. So we will be at 1 billion AUM in another, let's call it a month or less, which means in less than a year, we have basically grown like tremendously.
Yeah.
I used your tools to help put together my pitch deck, but it was all geared towards our tax clients. So high net worth tax clients who understood depreciation that had been working with us, or our CPA networks, our wealth advisor networks, is kind of how we did what we call kind of now our friends and family $1 billion raise. And now we are looking to transition into the next phase where we're looking at family offices, institutional type investors. And our pitch needs to change considerably. While they do care about a tax alpha strategy, it isn't the first thing they look for. We have a very complex solution. We also have various ways that investors can come in, from the tax model to a 1031 to a 721 improvement exchange down REIT. We have pure cash where they can come in private credit. So as I retweak my now tear sheet and pitch deck and kind of go after this, my question is, how do I do it without being too complex by saying, well, we're very flexible in our deal structure? Because we can kind of accommodate a lot of different options. But it is a very complicated thing. I mean, our moat is strong. We control the land, we control the power. Our tax strategies, we don't know of anybody else doing it. Our signed offtake agreements, our partnerships, in particular, our tribal partnerships. So it gives us speed to market that the rest of the country and world doesn't have right now. We're not waiting 5 to 7 years. We're looking at months.
Right.
So
Got it. Awesome.
we've got tremendous momentum right now, but the two challenges I have is, how do I explain our deal to, say, a family office, where it's, I guess, not so complicated that it gets into like I just don't understand this, or there's too many options. And the fact that we are new, I don't have all the due diligence documentation checklist that they would want.
Sure.
We are less than a year old.
Yeah. Well, that's great. Sounds like you're obviously like swimming with the tide and where things are going. So one is, like, obviously we have a lot of AI tools to help at least put like the due diligence questionnaire in place. I also, if you're raising capital that quickly, one of I think you're already a member in Family Office Club, because I recognize your name and I've seen you in the member portal. Are you a charter member or a verified member already?
Charter VIP.
Sure. Got it.
Yeah, and I've been to
Awesome.
several of the events on site. We were just in New York.
Awesome.
We sent one of our team members to Dallas. We were not able to go, but yeah, we do attend as much as we can. Normally in LA, because we're in California, in Southern California, and I use your tools all the time. It's what helped me build the deck and the tear sheet that I sent to you. But I now need to transform them to gear it towards a different audience, and I realize that.
Yeah, for sure. So here's like 3 or 4 ideas. One is we should follow up after this to see about having you speak at our $100 million summit next month in Dallas. The other thing is that with the verified membership, my internal team will produce your 1-minute video and will help you with deal structure and help you with the one-liner, etc. But also it helps you get an exhibit table and discussion panels, etc. The other thing is, when you're moving as fast as you are, one of the tools we brought up last week at our event, and we don't offer this tool, it's just a tool I use every day. It's called Whisper Flow. So it's WISPR and then flow.ai. And essentially, when you install this software, which is like $15 a month, you can program it so that, which is really easy to do, the middle button on your mouse, you click and you just speak, and then it will put in the dialogue box for Claude or Gmail or Slack or WhatsApp, whatever. But when you're raising money that quickly, there's so many messages coming at you and so many opportunities and so many directions you could go in. Usually moving faster means lower quality, but when you dictate to your computer at 160 words per minute instead of typing at 40 to 80 words per minute, you're moving 2 to 4x faster and you're being more accurate. And importantly, if you're using our AI tools, that like typing in like great context to get a great result from an AI tool takes some time. Well, now it'll take 2 to 4x less time if you're using Whisper Flow. So it's just a tool to know about and maybe be leveraging. The other thing is that I would really, if you're raising capital at that rate, it's about like maximal use of your time and hub spoke relationships. So I would look at who is in the 1031 tax advisory business, who is in just the tax advisory business alone. Like my neighbor who lives like 200 feet away from me is a tax advisor, for example, and he doesn't run deals or run investments like you guys do, but he looks for the smartest way to help plan out the taxes proactively, because most CPAs just say, this is what you owe. And then if you go to them and say, well, can I depreciate this car that weighs more than 6,000 pounds? They're like, well, yes, you can. And like, they never bring it up to you proactively, right? Like, so there's like
Yes,
a massive
we work
gap
with many
in the
like that.
industry. Yeah,
We
it
look
happens
for
like
the
all the
others.
time,
We
right?
look for the
Like,
ones that want to find unique ways to help save their clients money. Because we can harvest taxes 3 years back, which they kind of look at us and they go, what? We're like, yep,
Yeah.
we can harvest it.
Yeah, exactly. And when conservation easements started to get beaten up and cracked open, there is some people who are in that space that now are looking for something else. But also there's the trend of every wealth advisor and RAA and most business founders have had it beaten into their skull that like data centers taking off, energy grid will not be able to keep up, like need to launch data centers into outer space to keep up, et cetera. And so it's like, it's in the headlines like all the time. And so I could see RIAs and multifamily offices potentially allocating, $10 to $30 million checks, or larger over time. And so figuring out how to keep your materials concise and sophisticated enough to gain traction in that crowd, the family office crowd, but also just, high net worth business owners and other folks you talk to, I think is like a balancing act, and navigating that with your eyes open to like time efficiency and not having 3 different sets of materials for 3 different markets. It just slows you down operationally. When someone asks for something, you're like, oh yeah, well, we need to update, page 7, and first I have to wait for approval here, and then compliance has to sign off, and then like everything starts becoming slow, and then you could lose a $10 million check just out of slowness if you're not careful. So those are some of the things that we see come up a lot, and some ideas to help maximize the raise. And then like some of the things you mentioned earlier, like if it's a big check, I would for sure emphasize meeting in person, for sure use the phone, and not stop doing what you're already doing. Because if you're on your way to $1 billion in 18 months, total, or 2 years, whatever it will be when you hit $1 billion, you're obviously doing most things right. So I would just go back to like not making your free throws, not hitting a jump shot at the top of the key, and not being able to make a layup is what I'm talking about, like in basketball terms, when I share, like, let me show this list again. Like literally almost no one I ever meet with has these 6 things. You obviously have number 1, and you're like shooting off like a rocket. Like getting the one-liner super dialed in, getting your 1-minute video, amazing. Your 1-pager, which takes, like when you have a pitch deck, let's say 19 slides long, and the killer slide is slide number 4, because it explains your business model. And if they get slide number 4 and they get that key image, then they get everything, and you kind of like have them because they're excited. Then that is what goes onto the 1-pager. So you always do your pitch deck first, make it amazing, and then you look at it and say, what are the 3 to 5 visuals that do all the heavy lifting on what we're trying to convey? You take those visuals to put it on your 1-pager, and then you use our Clara or Dewey AI agents to write your 30 due diligence questions that every sophisticated investor should be asking you, but they're not all experts in tax navigation or bonus depreciation.
Yep, I used that one. I have that written. That was very helpful.
Awesome. Yeah, that used to be a pain in the rear to create, and now it's easy. Now there's no reason not to have it, right? So just making sure that like that you have your jump shots, your layups, your free throws 100% dialed in, because almost nobody does. Then I think that's one of the things that's basic. But I would just encourage you to focus on that. And that the last thing I'd say, and then happy to clarify because I went over a bunch of stuff at once, just for time's sake, is like, this is an example of a key image that every business should have something like this, where basically you're saying like, hey, engage with us first in this way. It just takes 5 minutes. Here's what we're leveraging. And here is something else great about our model, or here's how we drive value. And that's an example of an image that would go on a 1-pager. And you could send to people over text message, and then they get what you're doing just by looking at it. And that image literally replaces half a page of text that you'd have to type out otherwise. So that's powerful, and that's not really on this list of 6, but it would be part of the one pager, part of the pitch deck, etc.
Okay. Yeah. Right now, my conversations are $100 million to $500 million investment conversations. And I'm concerned about the due diligence that's required when somebody wants to write a check of that size. And we just don't have the audited financials yet because we're still building, and we're building fast and furious, and we have power producing already, which is a big testament to how fast to market we are. But it's minimal, right? We're just now, we're in month 6 of closing our first fund.
Right.
And having $1 billion of assets under management by the end of the month or next month, it's going to take us into a whole different level and realm.
Yeah. If that is the case, then I would upgrade your service providers anywhere you can. Like, instead of, and you might have already done that. That might be why you're successful already in part. But like, if you're using a regional accounting firm that no one knows the name of, I would go to KPMG or BDO. If if you haven't done valuations on something, I would hire a name like RSM, get the valuation, start the audited financial process, get a third-party due diligence report. Like, the small investment, all of that stuff takes, you'll get back multifold and growing that much faster, especially at the $100 million check level. They're going to want to see that, and it'll be a better answer to say, we've hired them, they're under contract. For transparency, like, here is when that happened exactly, and you can verify with these 2 partners at RSM. So we are doing everything the buttoned up way, but this is the current state of it. And at least it's better than like, haven't started that, haven't engaged them, haven't paid them yet, haven't contracted yet. It's just something to think on.
Yeah, thanks. I actually have that on my risk page. So KPMG is our tax partner. They also are monetizing our investment tax credits. So we got the big name there. Brown & Brown has our insurance wrapper to mitigate risk. So we've got that under control. We have big partners that are helping us. And we have press releases around some of our partnerships. Pretty big names in each of the respective industries. I think it's one of the reasons why people come to us and really quickly realize that we know what we were talking about. We've planned this out. We've thought it through. If KPMG is putting their neck on the line and helping us, then they realize that we're not a fly-by-night.
Yeah, totally. Awesome. Well, you seem to have gotten that dialed in, but hopefully that's helpful to someone else here. Maybe if you want to shoot me a note, like in the member portal or something, we can follow up now that I know you a bit better. And congrats on all your success. That's awesome. Happy to keep in touch, and it's exciting to hear how quickly you're growing. That's awesome. Yeah,
it's happened fast. And I will say that we've been really enjoying our time with meeting all the different folks that we've met across the country when we go to the different events. So it's been a great experience so far. We've only been members for it'll be a year in August, I think.
Okay, awesome. Yeah, well, congrats. I'm glad the AI tool's been helpful as well.
Yeah.
So
there were certain days where I probably was maxing out 8 to 10 hours on the tools.
Wow.
I was building my stuff. I was going through every aspect and iterating. And so, it was a lot of heavy powerlifting.
Yeah. We've spent well over 1,000 hours building out the AI tools. So it's awesome to hear that like multiple people have found them like super helpful, because it like was such an investment of time. And then what's interesting is like, when people talk to my team, they're like, okay, there's 50 AI tools. Like, that almost seems like an overwhelming amount. I don't know if I'm actually going to use those. Like, I'm really just joining for the events. And it, like, honestly, having all the AI stuff really doesn't help us like sell memberships. But like, once people are in there, our hopes that people actually try them out and see like, oh, they're genuinely valuable. Like, and it's a reason for them to stick around and stay, because like 18 months ago, we had 0 AI tools, and now we've got a ton in place. And a lot of cool stuff going on with Claude Co-work that we taught on last week during our workshop. In case you missed that, make sure you.
I did miss it, unfortunately. I was hoping to be able to make it, but
sure, no problem.
I was going to watch the replay.
Yeah, no worries, all good. All right, well, thanks for being here, and
Thank you.
See you at one of our events soon, and we'll catch up over email. And Shamane, if you're here and would like to go next, we could have you go next. I just clicked the unmute button there. How are you?
Hey, Richard. How are you?
Hey. Good, good.
Hey, it's great to be on here. Congratulations on your success,
Thanks.
and the success of the people here and everyone who's been up on this panel. It's been awesome listening in. I think I joined around February with Jennifer and went out to Beverly Hills, and I caught you in the lobby leaving the bar and introduced myself, and then since then I went to the New York event, and my partner as well has been attending, and we've brought some people along with us as well and introduced them to the community.
Awesome.
So it's been great, and I've even ran into people, from other events, investment bankers and other people, bump into them again, at your event, and I get to see everyone. So it's just, honestly, it's been hugely valuable. So it's one of the things we prioritize, is every quarter we get out there and we get our team out there and whoever. I have to admit, I was not, was it Ellen who was up here before me?
Yeah.
I have not been as diligent as Ellen,
Sure.
I think, when it comes to maximizing all the AI tools and resources. And, I think even on your introductory call, which was like 6 hours in the coursework, I didn't finish it. I haven't done some of the other coursework. And, one of those things was out to you, email you, send you things. And I kind of wanted to just sit by and see, how things went. But I'd love to, be a good student here. So if there's any advice you have for me in terms of getting caught up and maximizing, the community and the Circle app and just different things,
sure,
that would be helpful. I also just have a question about whether or not anyone has a good Florida tax attorney. But that's a side note. That's not that important.
Got it. I have a tax planning group that we sometimes refer people to, and they have clients in Florida, I know. So I also know a tax partner in South Florida at RSM. RSM is high quality, and like they always say, the cheapest is never the best, and the best is never the cheapest. So maybe one of those two resources could be helpful if you want to follow up, like in the member portal or over email. In terms of like leverage, I'd be happy to help there. Yeah. And Enrique is asking about coursework. There are certification programs that sometimes people miss. There's like a capital raiser certification program in the portal. There's a family office certification program. So those are options. Also, when you onboard as a new member, we recommend that you watch some videos and just get familiar with the platform. If you've never watched one of our capital raiser bootcamp workshops and you're raising capital, highly recommend you watch that. If you're an investor and you haven't watched the How to Start a Family Office mini series, I'd highly recommend you start there and watch that. It has a 30-some strategies for investors there. I think that many times people get the most value per ounce of energy out of those two resources, but also learning how deep the rabbit hole goes on deal structuring. If you watch some of the deal structure webinars and videos, and then also just remembering that like the team can leverage the platform, and the team should be leveraging the AI tools overall. So one team member of yours might leverage the Dewey due diligence tool. Another team member might be leveraging Clara to help with the materials. Another one might be leveraging one of the tools like Investor Advantage to practice the pitch or get feedback on an idea, et cetera. And what's interesting is that almost nobody wants to only pay for the AI tools. It'd be perfectly fine to pay only for the events. That's how it used to be. But what's super interesting to me is that the super intelligence operating system we built out on Cowork like allows you to harness the power of AI for your whole team.
I have all your skills. I have like a ton of skills that you guys created, downloaded, and I think they just operate in the background. I don't even think I have to prompt them.
That's true, except for if you have a project. So within Claude, you can install them at the base level. But then if you have a project for whenever you do due diligence, or if you have a project for getting your materials dialed in, then you can go to that project and permanently turn on the skill. So every single interaction with your due diligence project has the due diligence skill turned on. And so that's important to do.
Yeah.
But the AI tools can help with each part of the business. And now with what we taught last week at the events, dialing it in specifically for founders, investors, and capital raisers so that you'll build out intelligence centers for each major division of your company or each person on your team. Did you see that content from last week yet?
I don't know that I did.
Okay,
Intelligence.
no
I think
worries.
my partner was at that live event in LA. I think
Got
that's
it.
the one. It was on AI, but I did
Just
not
on
go to that.
Friday.
Yes,
Okay,
sir.
awesome. Yeah, well, let me know as you guys have questions on that because that can help. Literally, that helps with everything that the team member does. Like by definition, you're defining the top 7 things they do and programming their intelligence center to amplify everything they do. And AI 3 years ago was close to worthless for the average business person. And every year it's getting exponentially better. So it's like learning horseback riding.
I can almost run an entire investment management firm as like a,
Yeah,
I'm not
yeah,
solo, right? And I still want to expand that team, but it's like
totally.
the cost. It's like, oh my gosh, the amount of information.
Yeah,
You still want the right mind though, with the right experience, who's lived that and
right.
can verify that though.
Totally, you got to
Yeah,
override AI often. Like
yeah.
yesterday, AI was telling me like, "Oh yeah, well we need to write a Python script so that we can pull out of the CRM using the API because they won't let you export your notes on everybody as you transfer from CRMs." And it's like, first of all, you have to open terminal and then create the power, go into the PowerShell, and you might have to do a GitHub repo. And I was just kind of like, what? Like, why don't you just run Python script and Claude Code for me from Cowork? I don't want to have to do all that programming stuff. Like,
Yeah,
you do
exactly.
that.
That's what it should be doing.
And then it did do it. And then it did do it. But if you didn't know you could say that, or you
Yeah.
didn't know to override
Right.
it, it's like you're just going to go sideways quick. And so, what else related to your pitch could I help with related to like a one-liner or investor demographics to target or something that you feel like you're getting
Yeah.
hung up on when raising capital?
Well, I'm just in a very simple yet complex situation where I, like, on the investment side, did well, right? Raised about $3 million, acquired 15 million worth of like single family homes. We distributed net like 13.5%, and that's all like contractual stuff. We don't have any short-term debt or liabilities, nothing we got to get out of. So we're sitting fine.
Yep.
But then it's like, oh, we're gonna make this push to do this, this big fund, and it's like, how fast, can we acquire? Everyone wants scale, everyone wants all these things, and like we want them too. Everyone wants to grow,
Right.
and then finding what's realistic and what's not. So, anyways, I structured the fund as a 506B, and the fund's live. We're just actively deploying, but it's really slow growing because I've been really focused on getting our financials to like a higher level, like
Sure.
like without paying for an institutional audit, basically being auditable level
Yeah.
financials.
Yeah.
And that's just
Sure.
taken more time than I anticipated.
Yeah.
and
Totally.
and so this is where I'm at, like the 5-yard line. I have 43 investors, half of which are non-accredited. I'm giving them all the ability to, like, you can come into the fund if you want by contributing your share, your interests that you currently have
Right.
in the LLC,
Right.
or you can stay as is, or it's potential that as the fund grows, there may be liquidity, and a lot of investors lost money in other deals. Like 7 out of 8 deals went bad. So if I can offer that, that's a win too.
Right. Okay.
So now it's just been, okay, so simultaneously making sure everyone has all the information and is on the same playing field so they understand and can make the educated decision for the fund. Because the fund is the right move. It's better terms for them, and it's simpler. And we're better managers now, and we have an expanded team of advisors who are like great, gray hairs and know their shit.
Sure.
So whatever, we're gonna take care of them no matter what. But I had to I wanted to make sure everything was tied down for them. And then that directly ties into like as I'm talking with these family offices, or, I have verbal commitments for $5 to $10 million plus from a few people,
Sure.
RIAs, family offices, right? Who
Right.
knows? But, in those conversations, it's like, well, who would like to be bought out? Who's coming? Like, they also want to see the result of the transition. And they also, of course, no matter what verbally they say, you have to see audited financials. Like, unless you really, really, really trust, like, unless you're, I guess Marcus got $1 billion check before any contract was signed. Like, you tell me how that happened, but
right. I think he had like a contribution agreement that was massive, but they gave him the first 40, 50 million just based on a really short agreement. Like, this is for this, and like, but yeah, that was a crazy story. We had someone who didn't see it, a fireside chat, someone that raised like $4 billion from Blackstone, and you can see that in our membership portal if you want to search for Marcus Ridgway. But what else were you going to say there at the end of your question?
So I mean, that's just I'm just trying to share with you a little bit about where we're at. So,
okay,
it's kind of like flux zone. And so what I'm looking for is an anchor investor. And am I looking for an anchor investor with 5 million, with 15 million, with 1.5 million, with 500K? Right? I don't really want to limit myself, but at the same time, it's like, I know what I can do now. I know what we're deploying into now. I know I can give those answers, but also I know what's possible, right? Based on experiences with people who buy properties in larger bundles, right? Like, that's also, so, I was advised by Andrew LeBaron, an anchor investor or a GP, whether they're GP or LP, an anchor investor should bring, experience, capital, or a portfolio. And so, it's like, okay, I'm setting my targets there, but I'm just kind of walking blindfolded, focusing on that. It's like, what's next? Right. I just keep showing up and attending and trying to make things better and better on my end. And that's kind of where we're at. Like, I would love to meet people who are, interested in what we're doing.
Yeah.
Or not.
Like William Braum is the Navy SEAL who spoke a few times at our events that you probably saw at least once. And, he said that they say all the time that slow is smooth and smooth is fast. Like, the way to get things done the fastest is sometimes to be thorough and detail oriented, and then like the value is there, right? So that's part of the game. The other thing is, like, Chip Perkins had spoken at a couple of our workshops in Florida and New York, and he's raised over $8 billion the last 40 years. Wow. And he represented maybe 20 different clients to get that $8 billion raised. But he said it's harder to raise capital now than ever before. And he said there's no one magic bullet. You have to have a lot of the technical things right, but also build relationships and also be politely persistent and also have something super unique. And he said he won't even take on a client unless it just sounds so unique that he instantly leans forward and he's like, whoa. He's like, what are you doing? And like, so I would work to get your one-liner to make people say, wow, or like, whoa, really? Or like, I don't know, if it's harder for some niches than others, but for everyone listening.
Well, we're doing a structured co-ownership fund in residential real estate.
Okay. Yeah. There's more people doing multifamily and commercial than residential when you go to most investment events. So that's one thing that helps you right off the bat. Their fear index is high right now. The uncertainty index, not knowing who to trust. So anything you can do to build the trust and structure it in a way that builds trust and be extra transparent.
What I've found, Richard, in that, and you tell me if this is a good idea or not, but just to put that simply, it's like we do many deals on a small basis. It's not like we need to raise 15 mil to do one deal. We can deploy a deal with like 50K and run a whole transaction through.
Right.
And so it's very easy, I think, for people to like just test. And I've always found with partners, the people that we made the most money with, or we went the furthest with, or grew the most with, were the people who invested their time, energy, or money.
Yeah.
And
for sure.
That may not always be true, but that's what I feel.
Yeah, and allowing people to test is amazing. I think that's how you make progress. I mean, it goes back to some of the earlier hot seats here where we're like encouraging them to like get a client who's ultra wealthy, show them that the hyperscaler tech works, and then they'll go and want to invest. It's like, because they know that you're your sourdough bread actually tastes good, so they want to invest in your bakery, right? If they don't eat that type of bread, just like you hear on Shark Tank, they're like, Mark Cuban's like, yeah, I don't really use eyeliner, so I don't think I'm a right investor for this. You know what I mean? It's like he doesn't know if it's real or not, right? So everyone wants to know: is this a complete waste of my time? Is this fake? Is this a fraud? Is this like everyone else? Is this going to go sideways and just not work? Is this commodified? Is this like top 1%, 0.1%? Like subconsciously, it's what they're asking, and I think it's important for people to hear that offering a direct investment and a fund. Typically, you make the most progress versus only offering a fund, because a lot of sophisticated investors just like to invest directly and not be in a blind pool. So that's something that's sometimes helpful to hear as well.
Oh, that's very interesting. And I've been hearing that. I don't want to take up too much time. I can hop off here, but just that was something that came up. We did all this for the fund, and it's great. It's great because what it allowed us to do is, through the multiple iterations of portfolios, people got different terms, and the fund, what it allowed us to do is just put everyone on the same playing field, but make it better for everyone.
Sure.
Whether or not I've communicated that effectively, I'm like still in progress. Like most people understand, and when they do, it's like duh. But I still have people to work through because we incubated the fund for 1.5 years. We wrote it into our docs that we would go to a fund. But that doesn't mean for that 1.5 years that I walked people through that process and educated them as we were getting educated. Sure. So there's that communication gap that I found, I have to bridge, and in hindsight, anyways. So
that's one of the interesting things about it is like sometimes the only people or like people that go into the fund are past one-off investors, and now they trust you, so they're willing to go into the fund. Other times you might offer the fund, but if you want to test us out, you can do up to 2 or up to 3 one-off deals. But then by your 4th deal, you have to decide whether you really trust us or not and come into the fund. Other people do something where as long as you are investing more than $250,000 or $500,000, you can pick some one-off deals, and we'll deal with that extra hassle factor because you're one of our bigger investors. Would appreciate it if you also invested in the fund, or as long as you invest this much in the fund, you can also do direct deals.
Okay. The only thing I wanted to avoid was any kind of direct competition between the fund and then like a side deal. So I just would like to not gray that line at all, ideally. So what we could acquire it in a side deal and then assign it over to the fund at the same at the same terms, and then
you could say you could say that up to 20%. You could make up your own rules that you think would help, and say up to 50% or up to 30 or 20% of any deal can be done within an individual, but then the other half needs to go into the fund, and the terms are exactly the same, except if the person's writing this big of a check, they get this break in the fees. And if you don't like that as a fund investor, then please invest.
We could even the GP on the LLC or the managers on the LLC could be the fund, and then the LPs could even get something from our partnership with the investor. It doesn't hurt the investor. It doesn't hurt the person trying it out.
Yeah.
And then that would add to the fund even.
Yeah, okay. For sure. Great. I know. I think Jennifer brought your name up to me as someone that she was speaking with, if I'm not mistaken. Recently, we've been working really, really hard on getting our data room and everything fit. Cool. We've been using your guys' software. We've just been kind of back here, but it's been awesome interacting with your community. We'd love to, continue to figure out how to take the next steps here. Sure. Awesome. Yeah. Appreciate you being here. Thanks for doing the hot seat. I know it was like unplanned, so hopefully
appreciate you having me on.
Yeah. Just shoot me a message in the member portal if you have any other follow-up questions that we didn't have time to focus on here. And appreciate you being here. Hopefully we'll see you at one of the events coming up over the next month or two. And
be at the next big one for sure.
Awesome. Cool. I'll look out for you there. Thank you. And
Thank you.
I see a couple quick questions here, and then we'll try to finish up here in just a minute. So, and if anyone really was looking forward to getting feedback on something, just shoot me a note in the member portal or an email at richard@familyoffices.com, and I'll try to get back to you by tomorrow. Gene's saying, what's your recommendation for small fundraising? I just want to be a $50 million fund and graduate from a friends and family fund. Well, it'll be a little bit of a broken record. Get those 6 things in place that we've mentioned a few times now. Meet people in person more. Yeah, some cap intro people are very dodgy. Almost no one who's super credible will work on a commission-only basis, and they should be licensed if they're paying getting paid a commission, like broker-dealer license usually. Sometimes they can fall under an exclusion, but many times they need to be licensed. And honestly, anyone who raises capital for more than a year or two, they find out that everyone on planet Earth needs capital. So it's like, it is harder to raise capital for a startup or a company doing 2 to 3 million in revenue than someone doing 30 million in revenue. So why spend time on a small opportunity where they have no budget to pay for your retainer versus someone that could easily pay your retainer? And why pitch something that's harder to raise money for versus much easier? So in other words, anyone who's good at raising capital typically in 1 to 3 years graduate up the totem pole of serving groups that are just easier to raise for because they already manage hundreds of millions of dollars and capital is flowing at them rapidly. And what that means is there's very, very slim pickings on someone you could hire to do cap intro work for you. There's some, like, I don't even know of someone to refer to besides like a Chip Perkins or Sergeant Thomas who've gotten friends with over the last 20 years, you know? And again, they work with more mid to large size groups. So that is a big challenge. That's why you have to learn how to get this done yourself. And also at the end of the day, if you hire someone, they're probably just getting a lead warmed up for you. And then they're going to bring that lead to you. You still need to have your one-liner sharp, your video, your pitch deck, your data room prepped. Like, no one can do those push-ups for you. You have to do them, or you will not have the muscle of raising capital. And you'll hire the wrong capital raiser if you don't know enough about raising capital to actually vet somebody. Then you'll get taken for a ride, unfortunately. The whole point of Family Office Club is to raise your business IQ, your AI IQ, your financial IQ, so that when the right opportunity passes you by, you can stick your arm out and grab that football and then run it down the field a different direction because you're capable. But also it's to raise your financial IQ. So if your net worth goes like this and it jumps to 10 million or 100 million, it doesn't go straight back down by having your financial IQ not be high enough that you can navigate the jungle and not have people around you bring your net worth down to wherever your financial IQ is. That's super critical, right? So that's why I show up to all my events. That's why I'm always learning and interviewing people, etc. Let's see if there's any other quick questions. I've got to run in just 1 or 2 minutes here. Great. I see a couple comments. If you want to follow up and you think there's a connection with our community, just go to familyoffices.com. You can get some of our free tools there, a guest pass to our portal. You can go to the membership application and become a member of Family Office Club if you want to. Verified member gets you a background check mark next to your name. You get exposure on stage, you get an exhibit table, we do your 1-minute video, do your one-liner, and you get annual membership, all for $10,000. And just the exposure at the events is worth $12,000 to $15,000 just on its own. So it's like a massive value package just because we want more of our members to be background checked. We also have an annual option at $3,500 or kind of a starter package for 1 month at $997, and that just rolls into a little bit higher monthly fee than if you pay annually. You save on the first year and you roll into a lower monthly fee. So those are the options for getting started. Why is capital raising harder than ever before? So many investors are beat up. They still have the taste of their own blood in their mouth because they have multiple deals where distributions are cut to nothing. Multiple deals where the CEO has gone dark on them. They have no idea what's going on. A couple where they for sure lost all their money. 1 or 2 that was a complete fraud. And then they have some not going as well as expected and hopefully some going well. But 2.5, 3 years ago, almost all deals were going well. Momentum was there. The market's going great. Interest rates were low. Now high interest rates mean that spreadsheet pro forma math doesn't work out on many deals. Floating rate loans breaks deals. Also, it means you can invest in treasuries and get a 4%, almost no risk investment. And before, that bar used to be 2%, 3% treasury type return. So now investors know that in first position on a piece of real estate, they can earn X percent, which is higher than before in terms of that percentage. So now the bar is higher for any deal and what it needs to produce. But all that means is that you need our capital raising and founder and investor AI tools even more. You need to meet investors even more in person. You need the capital raiser boot camp. Like, the need for Family Office Club to be in proximity of ultra wealthy founders and hear about somebody like Tim at our Q1 event that's doing 900 million a year in revenue, or someone at our last event that built a $100 million platform in just 3 years, or Michael in our club who had never raised capital, bought a business, sold 3 years later for 100 million plus, or to hear from Ellen, like unscripted here on the webinar. I didn't know she was going to be sharing that story. I've raised like now almost $1 billion in the last year and a half. Like those are people you want to be around. You start thinking more optimistically, think bigger picture. You could do business with some of them as well, of course, but you'll automatically start acting more like them by being around them. And that's what we're giving you in terms of proximity in the Family Office Club. So I see Sherry on here. I recognized your name earlier, Sherry. Sorry I didn't call on you. We can next time for sure. World Cup matches. Yeah, there was a lot of yelling here yesterday with, I think England was playing and someone else. And today there's a barbecue a couple 100 feet away at my Brazilian friend's house that my wife and daughters are going to cheer for Brazil because she's half Brazilian, my wife. So I am going to jump off here. If there's any questions we didn't get to, please shoot me a note, richard@familyoffices.com, to come to one of our events and get registered as a member to unlock access to all of our AI tools and member portal and live events and everything that we talked about. Go to member application and join as a member today. We guarantee you're going to love it. You come to one workshop, one investor summit over 4 months, like you're going to love the value of the tools and the value of the resources. And we appreciate your time here on the webinar today. So thank you very much, and looking forward to meeting many of you in person at our July 16th $100 million summit. You just go to familyoffices.com/100 million. I'll put that link here in the chat, and then you can see the shark from Shark Tank and the awesome speakers we have at that event coming up next month. Should be fun. Good to see a lot of you last week. Take care. Bye.